Yo, what's going on? It's your boy, Chak Investing, and we're going to be going over a very important topic today. We're going to be learning about daily reversals. Okay, so stick around if you want to understand how and when price is going to reverse, when it's typically on a downward trend. We do like daily reviews every single day on this channel, so make sure you like that. Make sure you subscribe, first of all, and then secondly, press that like button. Okay. And then leave a comment below if you have any questions along the way. I also got a free Discord below where we talk about daily bias, and also I show the trades I be taking on a daily basis prior to coming at the end of the day and doing this daily review. So feel free to go join that Discord, ask me any questions you want whatsoever. Okay, so we're going to do a top-down analysis of NQ here. We're going to be going over key ICT concepts. I'll also be going over the ICT 22 model. It's a flagship trading model on this channel, how you can utilize that to make money today. Okay, let's get into it. So on the daily, what do we have here, right? So over the past couple of days, we've been bearish, right? So we came back into this daily FVG, right? We came back into this daily FVG, mohawked above the consequent encroachment, right? We expanded past the consequent encroachment, but then we did not on the next candle decisively expand away. So what do I teach on this channel? Whenever that happens, right, and you are going above this consequent encroachment of an FVG, you can anticipate it's going to get inverted if the next candle is very expansive as well, right? That's the kind of, if you want to, like when you want to, when you see PDRAs getting disrespected and when it turns into an inversion, like you want to see that happening very, very, like with a lot of power and aggression, right? But when price mohawks over it like this, right? So we have a wick and then come back and we just kind of hover around this constant approach on the next candle. Typically that could be a very bearish sign, or actually, being, finding resistance at this FEG. And so you can see price comes back above this level of the constant encroachment of the FEG, but then ends up returning lower. And so you see we expand lower, and inverting this daily VISI level, and then coming down and taking out this low from the 20th of December, right? And I was saying on my channel yesterday that I would like to see this low get taken out, and that's exactly what happened. And then what do we have today? We had a reversal, right? Where price came back into this range over here, right? So we were in a deep discount over here. We took out a daily low, and then we came back here. So this is what ICT calls, a purge and revert, right? So there's typically three candles, one, two, three. Where this third candle, after taking out that low, right, can tend to cause a purge and then a revert, right? So a purge below this liquidity. So we purged this liquidity below this low, and then we reverted higher, right? And so here's another reason why. That's one reason why we came back in the range, right? Second reason is that we took out this low, and then look at this wick, right? This wick on this daily candle. We came back deeply into this wick's range, right? After taking out the low, and came back and closed, with a very large wick like this. So that's basically a rejection candle, right? Like that's very obvious that we're rejecting and reverting after taking out this low, and we closed, pretty, I guess in a non-bearish fashion, more in a reversal fashion, right? You can see this type of candle forming a lot of times when we have taken out a key low and we're going to go have a short-term retracement, right? Or we could continue to higher for the rest of the year, or no, going into the early part of this year. But as of now, what my objectives were for price to come from this low and to run a little bit higher into this delivered rebalanced price range. We could possibly stop here and continue to go lower again, or we could come back up to this daily FEG. And so that's the second reason why price, had a bullish day today. That is something I was expecting. Last reason is that there's actually, SMT here with NQ, with ES. On NQ, there was SMT with ES. So if you look at ES, we did not take out this low, right? This low did not take out this low, but that low was taken out on NQ. So that's what we call smart money technique, right? So when one indice that is similar to another is taking out the low from the other indice, but the other one is from taking out a key low, but the other indice is not. It's actually telling you that it's a little bit more bullish than anticipated, which makes sense, right? Because if ES is too strong, where it's not actually taking out that low, like NQ, which is a little bit weaker, then it's telling you that equity is actually bullish, right? And they're not really trying to go lower. And so we, purchased some key liquidity there, and we ran higher, and we ended up, closing around the previous day high, and taking out the previous day high as well. So in the morning, when I'm seeing this happen, when I saw this candle form yesterday, knowing that we're in a deep discount, right? Like we could probably come back up to at least the equilibrium level, which you see we did come back up to today. I'm thinking to myself, okay, we're gonna at least come back to the equilibrium level. We rejected from here below yesterday, and we formed a rejection candle here, came back into the wick of this candle a little bit, rejected, and then went higher. And I'm thinking in the morning when I'm seeing this form and yesterday, by the end of yesterday's candle, I'm thinking, okay, we're probably gonna have a bullish day. Also, especially because of SMT. So I'm only looking for longs, right? So that's helped me set my bias, right? So what is this? Daily bias, right? I know on a daily candle, I'm expecting an expansion higher. And so if I'm gonna be looking for any trades, it's gonna be long trades. Okay, so let's go on the 4 hour real quick. 4 hour, you can see the same pattern here, except we start to form some bullish order flow here with these strong bullish candles. And price forms a small bullish order block right here that price taps into one more time at this 10 a.m. candle, and then it actually runs higher, and then ends up taking out this previous day high, going into the afternoon, and taking out some key highs here on the 4 hour as well, and on this level right here. But once we got to this equilibrium point, we could not go much higher for the day. I was anticipating that we might hit this 4 hour CB level at some point at least as well. I'd like to see that today, but because we got to this equilibrium level, and it was a pretty busy 1 to 3 p.m. session. 3 to 4 can actually be pretty trash after that, and so really shouldn't be looking for longs after we've had this large expansion move in the beginning of the PM session. So we'll go over that a little bit later. And why am I talking about things like this, right? It's very important for you to, one, understand what's happening on a daily time frame, right? On a higher time frame, but then also, talking about times of day, and when you have certain expansions, right? After an expansion is typically going to be a consolidation or a reversal, right? And there will only be really a reversal if you are currently, like, let's say that expansion was really a retracement, but that reversal needs to go in the total trend that we were going to in the first place, right? So let's say, for example, you have a Judah swing in the morning at 9:30, where we go up, right? But then you actually have, after that expansion, a complete reversal to go lower, because that really is just a Judah swing and a broader bearish move. But in this particular instance, right, I'm not anticipating a reversal because we have SMT on the daily candle, right, and we're bullish. And so once we've hit a few key highs, as well as having equilibrium level, and we have this large expansion already by 3 p.m., I'm anticipating the last part of the hour to typically be a consolidation, right? We've moved a lot in the PM session, and also in the, around the end of lunch. And so we'll go over that as well. On the 1 hour, what do we have? Overnight, a lot of consolidation, right? So what happens at 9 a.m. when we have the 9:30 open? Price expands higher. And you can see price expanding here. And then we make it above this 4 hour CB level, closing above that level, and then finding some support on it. Even though we're wicking lower, tapping this 1 hour bullish order block, we are closing above that 4 hour CB, so we're still bullish. It's still bullish order flow, right? And notice how this candle dropped down but then closed back up. That's similar to that daily candle I was talking about, right? When you see candles like this, where we go down, but we actually close back up, it's telling you that I just wanted to go tap something and then come back, right? Plus, you have this mitigation, not mitigation block, but you have this really what we call it. You could call it like a breaker. I'm honestly not sure what like ICT would call it. Actually, it's just blanking my mind. It's been a couple weeks since I've watched an ICT video, and I've been back away for the holidays, so my mind is just not as fresh as it used to be, but I'm getting back into it. But you can see this bearish order block that is now being supported on this side of it's a reclaimed bearish order. Is it a reclaimed bearish order block? Oh my god, what am I talking about? Anyway, let me just keep going. This level is important, right? This is a bearish order block, and price ends up running through it and taps it after it closes above it, and continues to run higher. And we end up taking out the previous day high, all the LRRs above here. We're revisiting this previous week low. And by the time we take out a few more highs in the 4 hour here and come over to this equilibrium level on the daily, price is pretty much done for the afternoon. Okay. So let's see, we had an expansion at 9 a.m., 9 to 10 o'clock. Then from 10 to 11, pretty choppy. But then from 11 to 12, you can see that we do end up moving again. Then from 12 to 1, having a pretty choppy hour, but then price expands from 1 to 3. And then here at the 3 o'clock, once we have that 3 o'clock candle, you have a short-term reversal, but it's really a pretty scandalous move. On the 15-minute, you can see we had all this liquidity below here, right? So, ideally, in an ideal world, I would like to see this liquidity get taken out. But guess why it didn't get taken out? I mean, we had this daily SMT, right? So think about it. When you have SMT, even on shorter time frames, right, price just starts rocketing the other way, right? So that's what's happening on this daily candle. We're not coming back down to key levels that have nice liquidity because of that SMT on the daily. Price is still rising higher without a willingness to really come down lower definitively, right? So we do have that expansion starting at 9:30 above here, taking out this key high over here from 11:45 a.m. yesterday. Price does end up reversing from a 950 to 1010. 10:15, coming back into this 15-minute FVG. And then you can see how we came back lower, but then closed higher. So you see that's the same candle I was talking about on the daily, same candle we saw on the 1 hour. Price ends up coming back into this wick and then runs higher. So this is really a bullish order flow candle, right? So price creates this propellant order block, and then price comes back and touches this previous week low, touches the previous day high, ends up just purging it, or not purging it, but really just shallowly touching it. Price runs lower, comes back into this 15-minute FVG, and then bam, we head higher, right? So we tapped at around 11:45. So now from about 11:45 to about it's not until about 1:15, price starts rising higher again to finally sweep this previous day high, come and take out a few levels, and then ultimately reach that equilibrium level on the daily. You can see that it is a real PD array. Look at how we close on it on the 15-minute candle. Look at this close on this 15-minute bearish order block, all right, and price ends up reversing. So that's why we had a reversal candle here on the 15-minute. On the 5-minute, let's just go over this pretty quickly. A lot of humbug overnight, but price starts expanding because of that daily SMT. We do have what we call, this is really a rejection block, right? Where price takes out this high from 9:45 a.m. happens at 10:05 and then runs lower, come back into that 15-minute FEG BISI. But I'm just thinking that this is just a short-term retracement, right, to go higher. So I'm looking for longs down here because my bias is higher because of that daily bias. So I'm not thinking about, even though intraday you're looking at this and it's like, oh wow, shorts look good. No, stick to your bias. That's why you need to be trading in a bias. Price ends up purging this low, come back at this 15-minute FEG, and then price ultimately is rising higher all the way until about 2:30, where price ends up coming back to this equilibrium level and then consolidating for the rest of the afternoon. Notice here around 11:55, once we touch that previous day high, look at how trash this price action is for the next hour at least. And then it's not until after the lunch session starts, really around 1:30, where price starts to expand again. What do you have on the 1 minute? So on the 1 minute, right? On the 1 minute, this is where I want to talk about my model, right? So this is the 22 model. ICT taught us in his 22 mentorship. I think it's the best model out there. It's just really easy to see. And he said it's so easy. In fact, it's the one model he would teach his daughter, right? And so it's basically when you have this particular pattern right here, right? So let's say this is a low, recent low. Price purchased that recent low, and that's a purge of liquidity. But then price breaks market structure higher, right? Taking out this high, and then leaves an FVG, which shows displacement in the way, returns back to the FVG, right, and it runs higher. Now, sometimes we don't return back to the FVG. We could come back to some old high or some discount level over here, and then runs higher, and keeping that FVG open, which would act as a breakaway gap to run higher. And so we can go over some examples of what this 22 model looks like, in today's trading action. So we don't really get any clean ones, right, that are in my bias, right? Now we see a couple that form here that are bearish, but I'm looking for one that's in my bias, right? So let's just spot what's going on here, right? So we have this high here, low at the bottom of the 4-hour FEG, consolidates above it for a little bit, from around 9:50 to 10:10. Around 10:06, we have this purge of liquidity right here, and forms a bearish order block, respects it, and then runs lower, taking out these LRRs and what is a short-term continuation purge to run higher, right? And so price ends up making a pretty decent 22 model. I had a bullish bias, but I don't know on a normal day if I would have taken this. I like to take 22 models that look very clean, but this is a 22 model nonetheless, right? So you have this low, high, lower low, and you have a purge liquidity below this low right here. And you also have a purge liquidity below these couple lows right here, right? And remember, there's a 15-minute FVG that's in this area that we're returning back to. And so let me just show that to you. Let me actually just put that on the chart. So we're actually reacting from a PD array. Right, so we're actually reacting from a PD array right here. You can see we're reacting from the constant encroachment of that 15-minute BISI, plus my bias is bullish. So you have this low, high, lower low, break of market structure above this high, and then there's an FVG in the way, right? FVG is the gap in between candles, right? So just the body, right? This low of this candle to this high of the candle, that represents displacement. That price is ready to start going higher. And so you can see that it's in line with my bias. Price breaks market structure above here. It returns back to this FVG, right? And because it's not closing above this high, a lot of times I could see price have a pretty good retracement. And so I would definitely be waiting for it to enter here at the FVG. So what would that look like? My entry would be right here at the low of this candle at the FVG. There is also an IFVG right here. And so you can keep your stop loss below, right? Because you have this breaker, you have this inversion for value gap, plus you have these FVGs. So you can keep your stop loss below here. And you can aim for, right? Ultimately, I'm targeting, I know that the previous day high is going to get hit. And then ultimately, you can even aim for this equilibrium level up here, right? So I'm waiting for an entry to get in. So that's a 1 to 6.6. That's a 666. Honestly, I'm not taking no 666s, bro. Praise the Lord. Hallelujah. Praise Jesus. Now, low, high, lower, low. Price breaks market structure above here, comes back into this daily FVG, and then price runs higher. Once price moves away, right, and closes above here, my stop loss goes below this low. Once we close above the most recent high, my stop loss goes below the most recent low. Once we close, not once we wick over it, once we close, price continues to run higher. Once it starts running higher, I'm setting my stop loss to break even. Once we get above here, taking my first partial, gets to the previous day high, taking another partial. Once we take out a couple more partials here at these highs, and then ultimately stop at the equilibrium level over there. So that is the best 22 model that I would have seen today. Now let's say you missed that one. There is kind of another one right here, low, high, lower, low. But you know, where are the FVGs, right? The FVGs are like kind of scattered around here. They don't look great to me. But because of my bias, and I'm so confident that we're going to be bullish, could have entered here. Once we close above this high, you enter right here, you know, on the close of that candle. Because a lot of times I noticed that if we close above the high, it may not return lower. So you enter on that high right there. Stop loss goes below, let's say the breaker, because you closed above that breaker at this point. So really good area to keep it, right? This breaker right here. And you can aim for that previous day high or this equilibrium level. I would have liked to at least aim for the equilibrium level to give me at least a 1 to 2. Price runs higher. Once we get here to this previous day high and taking out a partial, setting my stop loss to break even, and I let the rest ride. And you see that about 240, we would have gotten that. Once we get to that previous day high, you can say 1150. We consolidate. It's not until around 1 o'clock that price starts to trickle higher again. No really awesome 22 models here at this point. We've already reached all these levels. You know, I remember taking just a demo trade around here. There was another 22 model that formed here, right? Low, high, lower, low. Actually, I don't even think that's the one. No, it was this one. Low, high, lower, low. Break market structure for rally gap. But look at this 1 minute BISI in the way. I don't like to see that. Just not a very good setup. As well as we've already come to this equilibrium level, right? It's basically 3 o'clock after a very busy 1 to 3 p.m. session. I'm not highly confident that this is the best time to be trading, right? So that's why I would not take that on a real account or even a eval account, right? Like this is literally just paper. But that's why that trade failed. And you can see like we're seeing other bullish 22 models, but because of the time of day and all that we've done today, like price action is falling off. There's no point in taking any more trades at this point. So you need to understand what times of day and in what conditions are really best to trade. So hopefully it's been helpful. Press that like button, leave a comment below if you had any questions along the way. Join the free Discord, and I'll see you guys in the next video.